Everyone has an opinion about the stock market. Buy this stock, follow this guru, use this secret indicator, and most of it is garbage designed to sell you a course. In this video, I'm going to give you the one strategy that actually works for beginners, the one that beats 90% of professional fund managers over 10-year periods, requires almost no time, and has the backing of literally the most successful investor in history. It's not exciting. That's why most people ignore it. Let's talk about it. Real quick, I'm not a financial advisor. This is educational content. Everything I talk about is publicly available information, not personalized financial advice. Do your own research. Talk to a professional for your specific situation. Got it? Cool. Let's go. Before we get to the strategy, let's talk about why most people lose money in the stock market. They buy what's popular after it's already gone up. They sell when it's scary at the bottom. They chase quick returns. They try to beat the market. They listen to Reddit, YouTube influencers, or their cousin Dave. Here's the dirty secret. 80 to 90% of actively managed mutual funds, run by full-time, highly paid professionals with Bloomberg terminals and analyst teams, fail to beat the S&P 500 index over a 10-year period. They fail. With all their resources and expertise, what chance does a beginner have trying to pick individual stocks? Here's what the data says works. Buy index funds. Invest consistently. Hold forever. That's it. An index fund is a fund that holds all the stocks in an index. The S&P 500 index, for example, contains 500 of the largest US companies. When you buy an S&P 500 index fund, you own a tiny piece of all 500 of them. Apple, Microsoft, Amazon, Google, Nvidia, and 495 more. When the US economy grows, when those companies collectively get more valuable, your investment grows with it. Historical S&P 500 returns. Average annual return over 10 years, 10 to 12%. Average annual return over 20 years, 10%. Average annual return since 1928 to 9.8%. That means $10,000 invested 20 years ago with no additional contributions would be worth approximately $67,000 today. Just sitting there. Not watching charts, not stressing. Not all index funds are equal. Here are the ones that matter. For 90% plus of beginners, one of these three is all you need. 1. VOO, Vanguard S&P 500 ETF, tracks the S&P 500. Expense ratio 0.03%. That's $3 per year on a $10,000 investment. Basically free. 2. SPDR S&P 500 ETF. Same thing, slightly higher expense ratio, 0.09%, but higher trading volume. Most popular ETF in the world. 3. VTI, Vanguard Total Stock Market ETF. Broader than S&P 500. Includes small and mid-sized companies too. Some people prefer this for diversification. Which one? VOO or VTI? If you can only pick one and hold it for 20 years, those are your two choices. Even with a great fund, timing the market is a trap. Should I buy now or wait for a dip? This question costs people more money than any other. People wait for the perfect entry point and miss years of growth. The solution is dollar cost averaging, DCA. Invest a fixed amount at a fixed interval, regardless of price. Example, every Monday, invest $50 in VOO. Week 1, VOO is at $400. You buy 0.125 shares. Week 2, VOO drops to $380. You buy 0.132 shares, more for the same money. Week 3, VOO rises to $420. You buy 0.1119 shares. Repeat for 20 years. The averaging effect means you automatically buy more when prices are low and less when they're high. You never time the market, you ignore it. And the research is clear. Consistent DCA beats trying to time the market for the vast majority of investors. You need a brokerage account. Here are the best options for beginners. Fidelity. Best overall for beginners. Free account, no minimums. Fractional shares, buy $1 of any stock. No trading fees. Great educational resources. Best for long-term investors. Schwab, same as Fidelity. Excellent for Big E. Nenner's, strong platform, no fees. Robinhood, super simple interface. $0 fees, fractional shares. Best for people who want the simplest possible experience. Downside, has had controversy. Be aware. For tax-advantaged investing, the real power move, use a Roth IRA inside any of these brokerages. A Roth IRA lets your money grow completely tax-free. If you invest $6,000 a year in a Roth IRA starting at 25 and it grows at 10%, you could have 1.5 Megaliv Plus at 65 and you pay zero tax on any of it. That's the legal cheat code. Let me show you what consistent, boring index fund investing actually produces. Scenario 1. $100 month for 30 years at 10% average return. Total invested, $36,000. Final value, $217,000. Scenario 2. $300 month for 30 years at 10%. Total invested, $108,000. Final value, $651,000. Scenario 3. $500 month for 30 years at 10%. Total invested, $180,000. Final value, $1,085,000. $1 million from $500 a month. A side hustle making $500 extra per month, invested for 30 years, becomes $1 million. That is why side hustles matter beyond the immediate cash. I know what some of you are thinking, but what about picking winning stocks? Nvidia went up 200% last year. Yes, it did, after it went down 60% the year before. If you want to invest in individual stocks, and I get it, it can be exciting, here are the rules. 1. Never more than 10% of your portfolio in single stocks. If it goes to zero, you're down 10%, not bankrupt. 2. Only invest in businesses you actually understand. If you can't explain in one sentence what the company does and how it makes money, don't buy it. 3. Think in 5 to 10 year timeframes. If you'd panic sell if it dropped 40%, you have no business owning it. 4. Index funds first. Make sure the boring core is funded before you play with individual names. The stock market rewards patience. Consistently. The people who lose are the impatient ones. Quick fire round. Checking your portfolio every day. Don't. Set it up. Check quarterly. Selling during market crashes. That's literally when you should be buying more. Following hot tips from social media. Investing money you'll need in 1 to 2 years. Keep that in a high-yield savings account. Waiting to start because you need more money. $50 month started today beats $500 month started in 5 years. Not using a Roth IRA, especially if you're under 50. Here's your action plan if you're starting from scratch. 1. Open a Fidelity account. Free. 10 minutes. 2. Choose account type. Roth IRA if eligible. Regular brokerage, otherwise 3. Fund it. Transfer $100 from your checking account to start 4. Buy VOO or VTI with whatever you transferred. Set up automatic investment. Pick an amount you can sustain, $50,500 month. Pick a day, automate it. 6. Don't look at it again for 3 months. That's literally it. You're now doing what 90% of professional fund managers can't beat. The stock market isn't a slot machine. It's a proven wealth-building machine that rewards patience and punishes panic. You don't need to be smart. You don't need to pick winners. You just need to start, be consistent, and get out of your own way. Subscribe to Off Clock Hustle. We cover building income, investing it smartly, and building the life you want, one move at a time. See you next week.